The 15-minute time frame is genuinely all you need to become a profitable trader. Now, this is not spoken about enough in my opinion. The 15-minute time frame is all I use for entries. I don't drop to the 1 minute. I don't drop to the 5 minute. I simply stay on that 15-minute time frame because it blocks out any of the noise. After this video, you will learn exactly how to trade the 15-minute time frame, why it is so useful to trade it, and why it's better than dropping down time frame. After this, you will walk away as simply a 15-minute time frame trader. Now, let's get straight into this video and not waste any time. Why is the 15-minute time frame so good, you may ask? Because it blocks out all of the noise of the 5-minute and the 1-minute time frame. Now, I am not saying the 5-minute or the 1 minute are bad time frames per se. You can trade those time frames. It is just a lot harder, and most of you would be such better traders just focusing on the 15-minute time frame. Take a look at USD/JPY. Of course, we're on that 15-minute time frame, but first, you always need a daily bias. Daily bias always comes before anything else. So, what do we have here? A market maker sell model, quite clearly. Okay. We displace lower from this point and create a fair value gap. We then get a stop run into the fair value gap. At this point, I'm looking for distribution to the downside. So also mitigation block high, low, lower high, trade below. This becomes your mitigation block here. We trade into it, stop run, and now we are set for distribution lower. So we have our daily bias. Now you focus on the 15-minute time frame. Remember, the 15-minute time frame is all you need. Once we trade above this run on stops, remember on that daily chart, these are the highs I was talking about inside of that fair value gap. Once we trade above this, now we are waiting for what? We are waiting for displacement. How do you enter? Displacement and a stop run. It is as simple as that, guys. So many YouTubers and so many educators will tell you it's more complicated. It is not. You are looking for displacement and a stop run. Simple, right? And it works, why? Because we have this daily bias. So above here, buyers are trapped because they've gone long above these highs, and early sellers down here, all throughout here, people who are press and sell, press and sell, press and sell, uninformed traders, their stop losses are up here. They get tagged. Now we wait for displacement. Now we are willing to engage with this market. We wait. We don't displace, and then boom, we displace. Look at the sheer momentum here compared to this jagged move down. Notice how this is sort of back and forth here, and then it goes boom like that. We create a fair value gap. Now, what is the second criteria I gave you? A stop run. You are not shorting here. You are not shorting here. You are shorting when we come up and take out the stops into the fair value gap here. That is when you short. And now, any displacement you can also short down here. Why? Because we've already taken out the stops here into the key level. Key level being this fair value gap here, right? So do you guys understand what I've just shown you? The criteria for an entry on the 15-minute time frame is obviously daily bias, daily key level, and then displacement, and what? A stop run. That's the part everyone misses. And that's why people get stopped out early, because they're not waiting for that stop run. If you wait for that stop run in the opposing direction to your bias before getting in, I promise you will see your win rate shoot up and your risk to reward. Because now you can total soup this high. You can sell above that high, stop loss can go here, and you can target the lows down here. Look at the size of that trade. So just waiting for a stop run gave you huge risk to reward compared to if you just sold here with your stop loss above here, right? We can be confident in our stop being there now because the run on stops here has happened. When did it happen? Take a look at the bottom of my screen. London session, right? A stop run is only a key stop run if it happens at a key time. Remember that. Now, why is the 50 minutes so much cleaner? And why do I say it's all you need? It truly is all you need because it blocks out the noise, guys, okay? If we drop to the 5-minute time frame here, in the same portion of price action, you will see exactly what I mean by it blocks out the noise. You will see here, right? Let's take this for example. If you were trading the 5 minute, let's say, and you were fractalizing this bit of price action, let's get rid of our 15-minute markings. Let's say you were on the 5 minute and trying to trade this. What would you view this as? You would view this as an order block, right? So some of you would be going short here. Some of you would be shorting that there. You would have your stop loss, say, above the order block, or even a bit of space there, above the order block, and then you would aim for a 1 to 5 there, and then ran out. Why did you get ran out here? Because you're not focused on the 15-minute what? 15-minute fair value gap. Remember that. The 15-minute always comes first, before anything else. Now, let me show you this as well. This bit of price action down here. We zoom into this now. If you were on the 5 minute time frame, many of you would be going short all inside here. Short all inside here because you're not anticipating the 15-minute rebalance redelivered to hold. So you would be going short, 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 and then I know what traders do. As soon as we do that, and this is a black candle down there, you would move your stop loss above this high. All of you, a lot of you do that still. Okay, you would short this 5 minute fair value gap. Perfect. So you would short that, and then you would jam your stop up above that high. As soon as we come down to there, take a look at that wick. At one point, that candle was a black candle going down. It looked like that at one point. At that point, you would jam your stop above this high instead of this one. You would move your stop, and then you get stopped out, and then the real move happens. Why? Because you're not focused on that 15-minute time frame. Take a look. The same portion of price action, the same exact portion of price action. This is a rebalance redelivered. So we have price trade down, up, and then move away. This portion of price action now is balanced. So if you traded the 15-minute, you could have shorted the exact same area, but you would move your stop and you would keep it above the fair value gap high. So instead of getting stopped out early, you wouldn't, and you would catch the entire move on, say, a 1 to 3 or a 1 to 4. Do you see how focusing on that 15-minute time frame makes everything so much clearer? This is your intraday time frame, and this is what I tell my students in my Discord all the time. This is your intraday time frame. You don't need the 5 minute. Too many of you are looking at 5 minute order blocks, and then they sweep a high, which is just a 15-minute fair value gap, but it's a high on the 5 minute time frame, and then the real move happens, and everyone gets stopped out, and everyone's frustrated. The problem is, the thing you were missing is that 15-minute time frame. The 15-minute time frame is key. It creates a fair value gap, and you'll see this happen all of the time. It creates a fair value gap on the 5 minute. That fair value gap is a high, so it runs the 5 minute high and then drops, and you're stopped out because you jammed your stop above that 5 minute high, not realizing that that 5 minute high is a 15-minute fair value gap. And that is what everyone, and I mean everyone, misses. Okay, so you only need the 15-minute time frame. Now, I will leave you guys to digest all of that information and go into your own charts and check this out. With that being said, I want to mention now that my private Discord is only open for another 2 weeks or so. I said I'd keep it open for like a month, and it has been 2 weeks or so. We've had lots of new students join, lots of new students be happy with the teachings and what's going on in there. Now, I post weekly outlooks, daily outlooks, and I am probably going to start live streaming on Sundays as well inside of the Discord. So if you are interested in learning from me privately, being mentored privately, and me sending daily bias in there and potential trade setups, not signals, but potential trade setups, please do click the top link in my description. It will take you over to where you can purchase my private mentorship. Lots of students are finding success, and we have a boatload of new students already this month, the April sign-ups, and then I'll probably close it for another quarter or so. So if you are interested, please do click the top link in the description. If you want to support me for free anyway, please do like the video. It doesn't cost anything. Please just like the video if you find my content enjoyable and valuable. give it a like, and then hopefully we reach more ICT students or trading traders in general. Hopefully we meet more of them and bring them over to the videos. Thank you as always for watching, and I'll catch you guys in the next one.